Happy holidays, traders. Captain Jim James here with you again. I will be here with you all week long. If you're still in this market trying to trade through the holidays, please tune in. This or tomorrow on Tuesday, we don't have anything on our economic calendar, but we do have Joe Biden giving his speech. There should be some volatility with his speech, and I wouldn't always consider his speeches to be positive. He tends to want to calm markets, but I would never be surprised to see him dump some bad news on the markets on the Tuesday before Christmas, and because we've got some volatility heading into the rest of the week on Wednesday and Thursday. So just keep that on your plate, that it is volatile. You never really know what they're going to say. It could be something to calm the markets. It could be something that's negative to the markets. We know, or we think, that it's going to be about COVID. He'll probably bring up something about GDP as well with that news being dropped on Wednesday. I would not be surprised that he brings something up about that as well, as the Fed is on vacation right now after working so hard this year, quote unquote. But we need to talk about what's going on in the market right now, because it is very important for you if you're invested in this market. If you did not hedge above here or hedge into Friday, this is interesting too, because I made some good money hedging this position. This position here, I didn't get my hedge until end of the day. I bought a bunch of call FDs, and my account burned. Like, I had some pretty severe burning in my account going into Monday morning. My hedge didn't really cover as much as I anticipated it to. Through the volume drop off, anyone that's telling you, I don't know what, I guess the real place I should have made money was in the Sunday to Monday overnight in futures, trading that or hedging there. But having me just trade cash market and relying upon puts to print into today, it wasn't as good as it should have been. Anyone telling you that it was okay, but it wasn't great. It wasn't what it should have been, I guess, in my view. So, anyways, the key thing about this overnight though into Monday is that had we been green into Sunday, it would be unusual, and in my viewpoint, it would have been bearish. This sell-off down here should have been expected, but what didn't take place at 4 a.m. was a harsh reaction, and it did not carry over into cash market. We should have been, if it was a normal traditional year, Monday of OPEX, we should have been somewhere up here at 460. On a good year, possibly even 470 today. That's how big the reaction should have been. This is a word of caution to you if you are a bull. The market this morning, when we opened and we sold down, there was a prime opportunity there to sell down and test 450, 448, and that would have set us up for either direction. It would have set us up for a really nice long short on the market, bear country type stuff, something where you could kind of grip onto and say we are in bear town. And had we bounced off those numbers down below here, you would have seen a very strong reaction to all-time highs. It would have been to like 478, 4780, 4800. It would have been a stupid rally. But we didn't really get that down below here. But what did happen was we formed a base. And you could see it in Bookmap. The sellers were being absorbed. We had a couple price targets to sell the market above at that 4.5. It was 4.58 and 4.60. We were starting to build a base. Now that does lend some positivity to the bulls, that they need to test for 4,600 tomorrow or in the overnight for a push up to 4,700. And there were some clear skies yesterday heading into the end of the day. You started to see more of a base form, and some of the call hedge wall raise up higher from 460 to 4,700. Now that could be a carrot, that could be a fake out, but that was forming today into the close. You have to be aware of that if you're a bear and a bull. But the one thing I want all of you bears and bulls to understand is the play, if you were a bear today, was to let off your shorts and puts down here and wait for this next attempt at 4600, 460. It's pretty close to the same area on the SPY and the ES. I would say it's 4600 on ES, and it begins at 458 on the SPY into tomorrow. So this is cause for concern even in the overnight. We could tap, let's say we hit 460 in the overnight, we could sell down heavy at 1 a.m. tonight. That's on the table. Now, if we don't sell off into tomorrow, I'm going to still tell you every trade you take on, it is so volatile right now that you need to be putting on some protection. Whatever you're buying, if you're buying $1,000, you need to open up a program like there's like an options. It's called Options Profit Calculator. Open that up and find something that's outside of the money that seems reasonable that will trade to. A prime example would be if if you're taking longs here, you should be taking maybe 1/10 of your trade into, let's say, a 448p, just enough to cover 10%. If it's $100 of 1,000, if it's 1,000 of 5,000, you should be buying protection around here, either direction that you're trading. Okay, so if you were trading down below here this morning, you should have bought some outside the money calls. If you notice today into the close, so this afternoon I wound up buying some more call FDs down here, and they were in the red slightly the entire day. The moment we went into close yesterday, some premium kicked in. I wound up going down like, I think I was down 5 or 10% all day long, even though we were going up. And then once we got into the after hours, they cranked. I was up like 30% or something like that. So you have to buy, and I think these calls down here that I bought, they were weeklies for like 30 cents. I think they were 465s for Friday. And I think they cost me, no, they might have cost me 30 cents or 60 cents. I haven't looked yet. But they were cranking towards this close over here. So if you bears do that, you buy something really cheap, they should start to print if the trade's going the wrong way for you. Be cautious of this. Now, what does this mean as we head into the rest of the week, okay? And that it means that we are looking for, now we're looking for a test of this 460 area. If we reject off of this, we're going to trade down hard down here. And if we trade down hard down here, we are going to start drilling through this support. If we reject off this and start drilling down this support down here, or if we don't start bouncing around for a move higher or lower later, then my expectation would be anything below here, you're full bear. You're full bear this market for the next 1 to 3 months at minimum. And I'll show you guys some other charts here in just a moment to explain why it's going to take that long if we start drilling down below here. But this is definitely bear country. Just be aware of this, okay? If we get down here, we start pounding through this 4,500, this 4,850 area, somewhere down in here, we are in bear country. Now, I don't want to hear anybody talking about being a bull after that, okay? We're selling rips. We're going to don the bear suit, and that's all it is. Now, here's one last point. If we break through this 4,600, or if we bounce around down here long enough, and we don't drill through this level, you're going to see a rip that you haven't seen in a long time. You are going to see, what is this down here? You're going to see something like what is that? Like I don't know how many points that is, but you'll see a 150 point rip or something stupid all the way up to this 4,800. It'll be abrupt too. It'll be a turn. It'll move just like this one did over here. It'll move just like this one did over here. And we have a similar one back here. If you look at this one down here, this is pretty much what I'm talking about. You see that move? You're gonna see that move if we don't pound through this 4,850, this 4,500. You'll see that move in a day or 2, 3 days. It'll probably take like the end of a trade, and then we'll move over a day and a half, 2 days to a move to make all-time highs once more. It'll be something similar to this. So just be conscious of this as we trade forward. Now, I told you that Christmas rally doesn't start until after the 25th. And last week I talked to you about how I really wanted to see the VIX at 30 or 27 point something, right? So we're going to look at it right now. You really want to see the VIX up there. We kind of closed the gap today at 27. And I was talking to you about this on Twitter today about this 27.16. I think I even tweeted about this right when we were at the top over here. And I like this closure. I like this gap close over here. It's kind of closed, but not really. So what does that mean for us? Does that mean we trade up through 460? Maybe we get to 470, right? And then we sell down from 470 heading into the after Christmas. Let's say we start drilling down from 470, and then we slingshot back up to 30 to get that actual Christmas rally. Start to think about the VIX and where it's at and how it plays out with the narrative of a Santa rally. because right now this doesn't fit a Santa rally. It fits a good rally this week, but it doesn't fit a Santa rally without us selling down again at some point into tomorrow or into Wednesday, Thursday, Friday. Okay. Now there's one other bull thesis that would say, yeah, we can sell this down here, and then we can start selling down into the 12s and the 13s and the 14s. I don't believe that. That's like a FOMO bear to me. That's a more like FOMO bull thesis. I'm not really invested in that. So I just need you guys to understand that. So maybe we trade up tomorrow. Would seem logical. We trade up to 460, possibly 465. Let's say we begin to sell down. That raises the VIX on bad news for the rest of the week. Gets us into this 30 zone on the VIX, and you'll hear people crying about the market's going to go bear town. And then on Friday at the close, you buy some calls, and sure enough, on the 26th or 27th, whenever that Monday is, you'll see us sell down from the 30s. We'll have, brand new day, brand new year. We'll trade up into all-time highs, rolling into the first, second week of January. So just keep all of this in mind as we move forward. Start to put the pieces of the puzzle together as a trader. Put the pieces of the puzzle together as a bear or a bull as we move forward. You want to be looking at all these indicators, looking at the news, the economic news, what the market's trying to tell you. And this is the same thing on ES. You saw we had that bounce at 4 a.m. Wasn't good enough. We wound up bouncing up during cash market today. Again, we're looking at this 45.50 as critical support. I mean, this is it right here. Bear town bump down below. Bear town, 100%. You're going to start looking for some targets down below that are going to get gnarly. No doubt about it. We'll look out here. Make this an auto. And you're going to start to want to see, 431 to 426. You got a free fall down to 414. And ultimately, if we break below this critical support, I'm probably going to take some shorts heading into March for 395. That's how bearish I get. I don't know how bearish you get, but I'll get quite bearish in this move down here. This is how when we started selling down in March, you had a couple days in this area to put some real serious shorts on and some real serious puts on before we started trading down. And when we start trading aggressively down here, if you're a bull, you need to be aware. If you've never traded a bearish bear town, bear country, it gets violent. So, and you only get so many chances down here to actually take this bear trade on. I want you to be aware of this. If you are long this market, guys will tell you to just hold through a move like this. I don't know what I can say to. I think if we break below this, and hold a break below this 4,500, 4480 would be a critical number as a stockholder. I would sell out of my position. You would be. I mean, I can't say that you should. I'm not going to give you that financial advice, but if we get down here, right, it's going to get ugly. I guarantee it. 100%. I bet the bears know that too. I bet the smart bears out there know where we actually need to be to get bearish down here and some real deep price targets. This is kind of the area down here where you will start to see the market fail. Now, the one issue with us failing down here is there should be some nice up and downs. It shouldn't be violent like COVID. It's going to take a lot to trade down out of IWM. I was looking at IWM and their volume and market profile, trying to look back like 6 months, then a year today. I was doing some research on it. It's going to take some time to unwind the trade from IWM. It would fit the narrative of at least a month, I guess, if on a very aggressive sell down out of IWM. If you're gonna kill that COVID trade like that, it could take a month. And then if you weren't as aggressive, could take 3 months. If the market did it slowly, it could take up to a year. We could have a sideways down market for 1 to 2 years. I don't know where they're taking us with that. You don't know. I don't know. There's nobody on Twitter that knows. There's nobody on Wall Street Bets that knows. There's nobody on YouTube that knows how long it takes to trade down from here, or if we even trade down from here. But I just need you to know that when we start breaking this area over here, we're not only going to retest that. We're not going to just retest this area over here. We're going to start trading down. So we really need to be aware of that, okay, as we move forward. Now, I want to also show you NQ. NQ, we had the same sort of thing happen today. We traded just above the put wall. You know, this isn't healthy when you see stuff like this. You really want to see, we have the volatility trigger above it, 15,930. I think this volatility trigger is lowered. I haven't looked into it yet, but I'm thinking that it's down around 15,847. I did record and post some big numbers for you guys this morning. I have to go back into that video and see where the volatility trigger has moved, but this isn't a good sign. This is not healthy. When you start to see bounces like these, start to see these lower lows down here, this is not a good sign for the market. It's not a good sign even if you're playing these rips. It's just not a good sign. It's not a good look. It's a look to retest much lower lows over here from previous time frames, okay? Somewhere down here at 14,900, and then, or excuse me, 15,000, and then down to 14,591. So be conscious of this. This is looking like the weakest index. The point that I would give to the bulls here is as Nasdaq becomes more attractive to investors and traders, they are a force to be reckoned with. And so I was looking at the Tesla book map today, and it was wild. I want to buy Tesla at 750, and there are a lot of shorts on Tesla right now, but it was amazing to see the number of people that were buying Tesla, lined up to buy Tesla on multiple levels. I mean, it's in the face of this negative narrative on Nasdaq. Another stock that was in the face of the negative of this narrative were the buyers on Amazon. I mean, these are not your regular Joe trader, Joe investor stocks. When you're looking at the buy-in for an Amazon, it gets pretty serious. You're putting up big money. You're not putting up 100,000. You're putting up like $1 million trades. These are not man on the street trades, and the demand on Amazon was very high today, extremely high. To see those contrarian investments taking place today is somewhat in the face of us dumping NQ. It makes me think that NQ trades sideways and possibly slightly down from this point forward. You've got some nice swings, and we start to trade down. Maybe we have one big dump in March, right? Maybe February, March, we have one nice dump or something. And meanwhile, it's still risk on a few tech stocks. I don't exactly know at this point what's going on. I have to do some more research and find out why we now have bids going into some of these big tech names. It was an eye-opener to see Amazon today catching the kind of bid that it did with no sellers above. Amazon had literally no sellers today. None. No one waiting in the queue to sell. It was all accumulation by banks today. That is in the face of the market crashing. That is a positive for any of you bulls out there. And then the other thing that I looked at today was RTY. I was looking at the book map on RTY this morning during that accumulation phase, that base building, and I saw the same thing. I saw something very similar. I saw blue skies above. Nobody was trying to sell here. It looks like the banks were wearing out all of these people above to take it long. This looks very bearish to me, but there were no sellers. It was a grind. They were absorbing sellers over here. There was nobody waiting above to sell. They were just eating up the sellers over here. It was kind of wild to see. So what does that mean for the market? It means that RTY is highly susceptible to being squeezed. It means that NQ and its underlying stocks are highly susceptible to being squeezed. Not so much the composite of the S&P 500. I know there's some tech in there. It'll move, but there is some real squeeze potential in the Russell and inside of NQ right now. Now that doesn't mean that we don't go down from here. It just means something. I was pointing out when you look at GME in 2020 in December, when you hear someone talking about GME, then the news was GME sucks and it's a shit stock. And look at how bad it's trading. And it's going to get shorted into the ground. And when you have those conditions, it might go down a ton, just like Russell and NQ are, but you have to see the flip side of that coin. And if liquidity comes into a stock like GME or into the Russell or the Nasdaq, all you need for the Russell or the Nasdaq is one bank to add liquidity. Start taking longs and expanding this call wall above here. And this is already this high for a reason, because it's being squeezed or it's being crushed so much right now. This call wall is still this high, which is mind blowing. But when you have those conditions across the market and so many stocks, you have a ton of GMEs right now in this market that if liquidity comes in, you're going to start seeing these stocks pop off. And they are going to start to trap shorts over here. Now, does that mean it's going to happen? No, it doesn't. But I can tell you for sure that under normal circumstances, we wouldn't be in those conditions. Does that make sense? So if we're going up with normal gamma or normal volatility, we tend to trade up or down in a quite orderly fashion. But when we are in these circumstances right now, I would not, like today, I would not have shorted Tesla today at all. Like, too dangerous. I would not have shorted Amazon today. Too dangerous. Just too dangerous. All the signs were leading towards something other than what we're being fed and told. Now, there are some great stocks you can short right now, but those two specifically gave me the skull and crossbones. So just keep that in mind as we move forward. If you are going to actively trade or invest in this market right now, please, please. And I never tell anybody to hedge. Right now, I told you guys to sell out of your positions, I think, in October. I think it was October, November or something. But right now, specifically, if you stay in this market, you can easily get burned. One other note that I've made in the past is that in this time of year, if you're going to play the Christmas rally, if you're going to play these rallies, spreads are your friends. And we saw that today. As a matter of fact, I had some spreads from Friday that were green today. They were actually in the green. They were red into this morning, and they were green today. So you'll see your spreads will start to print. If you want it to be a bull and you're like, okay, I'm going to buy some call spreads that are deep in the money, 450s, right around the 450 mark they were at this morning for an expiration into January, let's say, call it like mid-January. First weeks of January, late January, those are going to have an easier time printing for you and then also putting on some hedging than anything else. I almost promise it. There's also some other strategies, putting on condors and flies, putting on some bear put spreads so that you can put bear flies on. Those are kind of complicated if you're a new trader, but you can also just do some straight bear put spreads that expire sometime in March. Like if you're getting really crazy bearish, right? Just put some kind of outside the money bear put spread. Those things, if the market goes up from now into March and then dumps down to 4,000, they'll still print. You could leave them there. They could be worth 1 penny as you head into March. And if we head down to that 4,000 level, they will print. They always print. If they're in the money at the time of the expiry, they're going to print for you. I've had Amazon spreads in the past, right? I've bought them for like 5-10 grand, and it's like 3-month out call spreads on Amazon. I've had them get destroyed, like straight up worth a few $100, and then boom, they're worth double. They're worth 100% of what I paid for them the last week of their expiry. And so you have to kind of diamond hand those trades. And if you're using them as a hedge, you just keep them. You just buy them. You hold on to them, even if they're worthless. Because if your ultimate thing is we're trading down to 4,000, then they're going to print eventually, right? If you believe in your thesis, if you believe in the due diligence that you're doing, your own technical analysis, your own fundamental analysis. I know none of this stuff matters anymore, but you have to believe it, okay? Or you have to believe in what your decisions you're making and the trades that you're making out there. Okay, so I'm going to leave you with that for tonight. What would be my expectations into tomorrow? I guess I'll leave that with you. I'll bring you back to ES real quick so you guys can see what I'm thinking for futures and for tomorrow. What I'm going to say to you is that I hope we start, I'll get a little, my hope in the overnight is that we start to trade back down here. I know you guys are going to be crazy with this, but my hope is that we start trading down here and it's left to this is showing at 2 o'clock in the afternoon. This is just an example. Hoping that we start to trade down a little bit and down here, and we wait for cash market to make an attempt for 460. If we trade, hold on a second here. If we begin to trade down here and then up at any time in futures, there is a potential for a severe sell-off down into cash open tomorrow. Unless the algos and the banks know something that we don't know, there's a great chance that if we hit this 4,600 in the overnight hours, that we will make another crack at this 4,800 heading into tomorrow. Now, if it's pretty flat all night long, let's say we're flat tonight, we'll go down to the 1 day or the 5 day, I guess. So let's say we're pretty flat in the overnight, right? You are going to look for, let me go to this Webull real quick. Let's make it easier. This makes it easier for talking about cash. So let's look at cash tomorrow. So in the overnight tonight, right? If we come up to this 4.6, if we bounce off this 4,600 in the overnight, we have real risk to come back down to 4,800, okay? Now, if we just trade flat in the overnight, you are going to be looking if we trade flat in the overnight or don't get up to this 4,600, or if we bounce off 458 in the middle of the night, you're going to be looking for some sort of a cash fill down here at 455.36, and then an attempt in cash to break through 4,600. If we don't hit this 4,600 in the overnight, this is going to make me very bullish on the open down here at 4,500, because we're being set up to make an attempt to break through. Now, if we break through this in the overnight tonight, this is a nod from the banks that they're going to take it higher to 4,700. So you guys have all the scenarios for the overnight. I'll explain it one more time for you, okay? So we're in the overnight right now. If we touch 4,580, or if we touch 4,680, there's a fair chance of a rejection and an attempt down to 4,500 tomorrow in the AM. If we trade above this in the overnight, it is the algos, the banks telling us that we're heading higher. This would become a face ripper. If we trade sideways overnight, I'm going to be looking for a dip buy here in the morning at 45,542, and we will make an attempt on all-time highs tomorrow and breaking through this 460. So when we make this attempt tomorrow, if we do this tomorrow, and we make this attempt, if there is firm rejection, you know you're going to be doing two things here, right? You're going to be cutting your calls and letting the banks do the work for you. You also know that up here, if you have the opportunity, that you're going to buy yourself some protection. Automatically here, you're going to buy some outside the money 44.80 puts or some kind of put spreads. And let's say we break above here, you let the banks take us above this area. You're going to take a long once again to 47.80, okay? This is a pretty complete trading plan for what's going on overnight and into tomorrow. If you were to just follow this part of my video today or tonight, and you rewind it rewind it or whatever to play it forward and start to think for yourself how you're going to trade this into tomorrow, this is a pretty firm trading plan. This is actually a firm trading plan for the overnight traders as well. This is pretty much what you need to know. Not too much more you need to know at this point. Now, I wouldn't get bearish if we don't bounce off this and start selling down immediately in the overnight, and we just come back down here to retest this cash gap. Then I'm bullish here. I'm bullish at least up until here, until the banks take over. Okay, so I'll catch up with you in the morning, and if there's any kind of pivot moment in the morning, I'll come on live with you. If there's any pivot moments in the overnight, any kind of nastiness that takes place in the overnight, I will come on live with you in the morning. Same thing in the afternoon. If there's no noise tomorrow until late in the afternoon, I'll come on live as well. And on that note, I just want to take a moment to say thank you for all of the support that you've shown me out there in YouTube land and in Twitter land. I feel like you guys are my family members, and I think in some ways you guys are getting used to hearing my voice every day, whether it's live or on video. And we are heading into the holiday season, right? It's okay for you to take a moment and just relax. We don't have to trade every single day. And so I want you guys to leave you guys with that as we head into the first of the year. And on the final note, you should be expecting from me at some point in the coming week to have a better connection for Bookmap Live, so that we're not having those buffering issues that we've run into. I've had to upgrade a router system and upgrade the internet, and I have two computers, but I'm now going to throw in a third computer so that I can stream that one separate from the Streamcast, and I can live trade with you guys during regular session. So I look forward to those changes as we move forward. I look forward to all of you enjoying your holiday. Get out there, hike, bike, ski, spend time with a friend, a family member, even if it's just sitting down and reading a book. Take some time away from the market for yourselves, okay? So that you can rejuvenate and be fresh for the new year. I'll catch the ones that are trading the rest of this month out tomorrow in the morning.